Hello, Ledges. Tonight I want to talk to you about two things in Thursday's tips session. I want to talk to you about the New Zealand dollar versus the US dollar because this was an order that I ended up cancelling, even though I had discussed it in Monday's markets. And I want to explain to you why I ended up cancelling it. And then the main part of the session is I want to talk to you about spreads. And that section may be extremely basic for some of you, but it also might be extremely useful for others because there are a lot of people out there that seem to be getting stopped out or actually just missing getting filled on trades, and it's due to not factoring in the spread correctly. And it becomes especially important when markets are trading extremely close to your stop, which we have seen. Remember the Euro GBP trade that I was in? I had an initial stop at 85.20 plus spread, and the market traded up to 85.80. In the New Zealand dollar, I was talking about putting a stop at 70.28 plus spread, and the market trades up to 70.27. So you can see how vital it is. But let's talk about why I cancelled the New Zealand dollar. And the reason is because I trade from one level to the next. So when we broke out of this huge level that I have as a weekly, you'll see that the market moves up, makes a swing high here, then pulls back and retests. Now it's an immediate retest, which is not something that I trade, but nonetheless it retests and moves up to our anticipated sell area. Now I should say at this point that I actually did pull it a lot earlier. I pulled it when we were down trading in the range because quite frankly we were moving away from the area and I didn't think we were going to get up there. But the reason I didn't reinsert it is because I now figured that even if we did turn at that area, it wasn't a particularly fantastic risk reward anymore, because this was now becoming the FTA, or first trouble area, the area where price could stall at. And I'm particularly thinking that because if I look at the far left of the chart, we did have some highs over there as well. So we're now looking at a zone that looks something like that. And even though I was anticipating trading that with a 15 pip stop, if I'm looking at getting in at 70.15 and thinking it could run into problems at 69.98, there's not a lot in it. It's probably, time you factor in spread, literally a 1R. Now sometimes I do take those 1R trades. I mean, you saw me take one in the Euro GBP, but I've got to say I was a lot more confident in that level, and I think it was a lot more of a formidable level than this one. Now this one was good. I mean, we did have an area of prior lows, we did have a fib retracement level that you'll remember. If we fib from the high to the low, there was a 38% fib coming in just beneath that area, and we did have ATR. So from those perspectives it was good. But in the Euro GBP, remember we had a weekly bias. Here we had a daily bias, and we had a very, very structurally strong level. So I was prepared to take what would have been not a particularly great payoff on that trade because I saw it as an extremely high probability. But let's talk about spreads. Now any market is going to have a bid and an offer. So you'll see here that the bid is 70.19 and 6 pipettes, and the offer is 70.21 and 9 pipettes. Now the distance between the bid and the offer is 2.3 pips. Incidentally, if you hear me say I'm sitting on the bid, that means I have a limit order to buy. If you hear me say I'm sitting on the offer, that means I have a limit order to sell. If you hear me say I'm hitting the bid, that means I'm selling at market into the bid. If you hear me say I'm lifting the offer, that means I'm buying at market. Now the important thing to understand is that the charting that you're looking at is going to be quoting either the bid price or the offer price, or it may even quote the mid price. You can tell very quickly because if you have a look at FX Pro here, you can see that that is the bid side of the quote. If I was to bring on the core spreads account and we were to have a look at, say, the New Zealand dollar, and we pull up a chart for it, and we also pull up a quote for it, you'll see that the price they're quoting here on the chart is the mid price. Okay, so 70.21 and 9 pipettes is the mid price of this bid and offer. Actually, with core spreads, you can't change this chart to a bid or offer chart. Some you can. Now, it's important to work out from your charting which side of the market's being quoted so that you can factor this into your orders. Now, let me explain what I mean. Now, we've just established that the spread is 2.3 pips, but it's actually varying with FX Pro. But that aside for a minute, let's say we want to come in and we want to short the New Zealand dollar where the original order was at 70.15, and we want to put a stop above the high at 70.27. I usually put my stops a pip beyond the high. So what most people will do is they'll think, well, a pip beyond the high is 70.28. I'm going to put my stop at 70.28. Now, what happens is then the market ramps up into this area and you get filled on your short at 70.15. But the market keeps going up. You then get stopped out. The market aggressively falls away, and traders come in the morning, see that they've been stopped out, morosely move their mouse over the candle, and then go, hold on, the high is 70.27. I had a stop at 28. How the fuck have I been stopped out? Well, obviously what's happened is that the high is 27 and 2 pipettes. But remember, that's the bid price. So when the high was 70.27 and 2 pipettes, which it was here, assuming the 2.3 pip spread, then the ask would have been 70.29 and a halves, which is why you've been stopped out. So what you would need to do is factor the spread in on the buy side if you're using FX Pro charting. So when I come in here, I'm putting a stop 1 pip above the high at 70.28, but I'm factoring in a 2 pip spread, hence the fact I said in Monday's markets that my stop would be going at 70.30. The reason I factored in the 2 pip spread, but you're clearly seeing a 2.3 pip spread in the example here, is because I don't trade with FX Pro. But that's a moot point. And obviously it works in reverse as well. Let's say you wanted to buy this high after it breaks up here, which is 69.73. You've got to factor in the spread, because that order's not going to fill until the ask is 69.73, which means that the bid, assuming a 2 pip spread, would be 69.71. So if you want to be filled long at 73, you have to put your order in at 75. The stop can go exactly where you'd want it to go based on the chart, because remember, the chart's working off the bid. So regarding the stop out at 70.30 that some people spoke of, if you have a look at core spreads and we pull up the chart, they have a 2 pip fixed spread, and you can see at the high last night the mid price was 70.28 and 3 pipettes, meaning that the ask would have been 70.29 and 3, and therefore you would have survived a stop out. If we have a quick look at CMC and we stick it on an hourly chart, with CMC we actually can change the chart type from the bid to the mid to the sell. So if we actually have a look at what the buy was at the high and we hover over it, it was 70.29.4. So again, it misses the 30 stop by all of 6 pipettes, and you capture that move. But again, I know some of you guys that kept that order in said you were stopped out, and the likely reason for that is that your broker had a wider spread at the high. Now, what can you do about that? The only thing that you can try to do is work out what potentially the spread could be. Now, some people say, oh, my broker fucked me and the broker's always out to get me. You have to understand that spreads do widen in times of low liquidity. For example, the Asian session, often before news. So it does happen, but it is my belief, which I'm not able to statistically prove, that some brokers probably do, let's say, take the piss with the spread widening compared to what the underlying is. The only advice I can give you is, if you're holding a trade through a time when spreads are likely to widen, you can have a look to try and work out what's the widest that spread could be to avoid yourself potentially being stopped out on spread widening. So core spreads, for example, have fixed spreads. So if we go to the New Zealand dollar versus the US dollar, they have a fixed spread of 2 pips, and it doesn't vary at all. What that means is you don't have to worry about getting stopped out on spread widening in the middle of the night. Now, that's not the same for all markets, even though they do say that they post fixed spreads. If we go to another FX pair, pound dollar, we can see that the normal spread is 0.9 pips, but out of hours it increases to 1.9. Out of hours is outside exchange hours, so actually for 6 minutes here the spread will go from 0.9 to 1.9. But that's useful because you know then what the widest the spread could be. If you do have an account with a different broker, then you might want to have a look and try and work out if they are able to display the same information on their spreads. I know, for example, CMC have actually got a spread chart. So if you go to New Zealand dollar again, we can go to chart type at the bottom and we can choose spread, and we can have a look, and you can see that last night the spread actually was 2. So out of hours there wasn't any serious widening going on. But then you can have a look at certain points, like here, look here, and that was at 6 PM UK time, and you can see that the spread had gone to 4.8 pips. And you might want to look back over, say, a little bit of data and try and work out what's the widest spread that's been. It doesn't mean that a spread won't get wider, but it might give you a little bit of an idea, because obviously it's extremely frustrating if you get stopped out on that widening. Obviously though, bottom line is, the more you're having to factor in spreads widening, the more it's eating into your payoff on the trade, because obviously your stop size is increasing. So really you want to try and find a broker which quotes a pretty tight spread at all times. And I know it's not easy, but as I say, that seems to be what core spreads are able to offer at the moment. So if I'm pleased with core spreads, it may actually be the case that I end up changing to them.